Welcome, Chaitra and Hena. It's good to have this chat on stage, which we were having in the break room earlier. So why don't we start with you guys telling us about what you're building for women and some men. Uh,
Hi everyone, my name is Hena Mehta. I'm co-founder of Basis. At Basis, we're building a full-stack financial services platform hyper-focused on urban women in India. I'm sure we'll go into more learnings, insights as we've been building this platform. We recently launched a card for women. We've called it the Power Card. It's India's first card curated for women. We've partnered with about 40 women-run, women-focused brands to build a first-of-its-kind rewards ecosystem. And a lot more to come as we look at financial services and really design it for women from the ground up.
Hello everyone, my name is Chaitra and I'm the co-founder of Salt. Salt, my Salt app. It's a company that is focused on getting people to track, save and invest better. And our distribution focus is on women. We have started with wealth first. So, we have a brokerage platform through which we sell direct mutual funds, we sell digital gold. We also have a budgeting and tracking tool, which is an NLP-based tool, which makes it easy for you to track expenses and all your money movements on a daily basis, literally as easy as sending yourself a WhatsApp message. And we are a gender-neutral platform, so we say that we are inclusive of men. One of our, the first features that we launched is something called the Money Personality Test. And if some of you have not taken it, I have a few bookmarks here that I can hand out later, which has a QR code on the back. About 250,000 people have taken it so far. And it's a psychometric, it's like the MBTI. It tells you what your relationship with money is. And most people agree with what our results are. Please take it, and I think it'll be very, very interesting. So you'll realize whether you're an anxious artichoke, a cautious cabbage, a discerning donut, because we believe that for the people who are not already actively managing money, whether it's men or women, the emotional barrier is the biggest one. And the fear of making mistake is the biggest one. It's not a knowledge barrier. It's a action barrier. Like you take the first action, it's like dipping your feet in the pool, right? You cannot learn how to swim unless you get your feet wet. And we are watching YouTube videos, reading articles, and trying to figure out how to manage our money. So Salt's our tagline is build your money muscle. So that's what we do. Thank you.
Thanks, Hena and Chaitra. I think one thing that I would like to know as you are interacting with these women who are starting to own their financial lives is that what are your key insights which a lot of us don't even think about as we think about women coming into the financial sector, building their own savings, insurance and credit products?
The first, so we started, Salt's journey started by talking to about 500 plus women. And what we were trying to figure out was, is this really a demand problem or a supply problem? Is there even a profitable business to be made here, or are we looking at like a DNI NGO cause, right? It was something very important for us to answer. And the most surprising thing that happened to us as we spoke to these women, even within the first 25, 50, 100, almost 9 out of 10 women told us, thanked us at the end of these hour-long conversations that we used to have with them. And these were research conversations, so I had to thank them, but they were thanking me in return because they were sharing with me that this is the first time they were talking to anyone in their lives about money. Money was a taboo topic. And so then came the biggest insight was this, that the barrier to taking charge of money starts with this barrier to talk and think about it. And it's a very, it's not a biological trait, it's just a pure conditioning that has happened because normative behavior, men have their cohort groups, not all men, the men who do invest end up having these buddies that they trade stock tips with, they talk money about, and that leads to gender pay gap. That leads to, we think that as it's not organizations systematically discriminating against women alone. I'm sure there is a lot of and that needs to be addressed. But women also don't feel comfortable speaking up and asking for a raise or asking for more money, right? So I think that was what we realized is the problem. So then we asked ourselves, how can we productize these interviews? Because what this interview was just doing was getting them to think about it and unlocking their, at the end of it, they were like, you know what, from today I'm going to do something about this. So we realized that that was the first step, and that's where the psychometric is an attempt at productizing that emotional, productizing the mirror in some sense, right? That conversation that they would have with me, which would make them realize, you know what, I have this kind of a relationship with money. From the funniest thing is, people who are, there's a cohort called anxious artichokes. They are the ones who are most likely to take action. They're the first movers when it comes to signing up for SALT, purchasing a mutual fund, or investing in gold, depending on what they have a propensity for. So that was a very interesting insight. I'll share many as we go along.
So very similar actually, right? I think one of the key insights we learned early on was that women were looking for privacy, they were looking for autonomy, control, and independence when it came to their money, right? For a lot of times, people ask us, you know, women are okay leaving this to the men in their lives, right? Before marriage, it's a father or a brother, and then after that, it's your husband. We learned, regardless of marital status, right? You're single, you're been married before, divorced, separated, doesn't matter. Women were looking for a way to do this on their own, right? And as Chaitra rightly pointed out, right? Talking about it was the first step, right? There is an inherent confidence gap. There are knowledge gaps. Knowledge gaps are not restricted to women alone, right? I think personal finance, education is a gender agnostic problem, but women tend to not take that first step into learning, right? Let's say, what is a mutual fund? Or how does inflation work? Or where should I be investing my money? Or is credit, I know that's one of the topics we're discussing, is that a good thing? How do I use it to enable my life? And so these insights are what even drove how we designed our product, right? We took a community and education first approach that, you know, because usually the problems or the barriers we saw was that I don't know enough, so my money is just safest in my FD. Or I don't trust the information I'm seeing online, or I'm even hearing from a family member or a colleague or through a Google search, right? So again, that lack of trust, lack of knowledge just leads to inaction. And so that's the bit we were trying to solve. And Sayali, I know I was sharing this with you right before the panel, right? With the whole community bit, and Chaitra, you talked about women not talking about money. Very early on as an experiment, we built communities without restricting who could join, right? I remember it was in an early space, we saw men, women, everyone joining the group, you know, but very quickly, men were just taking over the discussions, right? And women were there. They were passively consuming some of the content, but taking a backseat and staying silent, right? And that is a problem we see. I mean, obviously not restricted to money, but we see it across the board, but money is included. And then when we changed that into a closed group, a more private, a more safe space, and we saw the floodgates just open, right? In about 3 months or so, I remember this was back in 2019 when we were experimenting, the group organically grew to about 5,000 women. No topic was off limits, right? Women were talking about sensitive life events like, I'm going through a divorce, right? How do I reconstruct my financial life? COVID, we saw a lot of, I mean, unfortunately, women having to suddenly take over their family finances after losing, losing the important men in their lives. And so none of these, like before this, women didn't have that avenue, right? Like you said, men get together and talk money. They talk about the markets. They talk about where they're investing next or whatever it is. And so that community bit was important to us. In fact, we used this set of acronyms, which we call the 4Ds, that disproportionately impact women, more so financially. It's divorce, it's death of a spouse, it's a disaster, which we saw play out real time, right, 2020, 2021, and it's debt, right, just inheriting family members' debt. And so, all in all, yes, women tended to be left out, like with many other things. Financial services inherently was designed for men because men have been the owners of wealth historically. But obviously, that is changing now, and women are just looking for better avenues to save, to invest, to use credit as an enabler of financial goals, to adequately insure themselves, right? And I think that's why we're building what we're building.
Yeah, in fact, we saw that data shows this, right? So out of majority of the people that we polled in that 250,000 people that I'm talking about, a majority of the women said that they had moderate to high knowledge when it comes to financial services, and they were comfortable with the vocabulary. But when they would rate themselves moderate to high on knowledge and comfort with vocabulary, they would rate themselves as 1 to 2, which basically meant only if I'm forced to and if there is a reason to, when it came to participation in money conversations. With men, it was the reverse. Like the men who would rate themselves as 2 to 3, low to moderate in terms of knowledge or comfort, said that, of course, I initiate conversations. So I think there's a lot to be unearthed over there.
No, we see that in the workplace as well, right? And I remember whether it was employees or colleagues, the negotiating for paycheck is not there. I was negotiating, ask me for more money, that kind of conversation. But the hijacking is real, whether it is in conversations or whether it is afterwards. I think in COVID or during Demon, we saw that husbands discovered that there is money that the wives have, or as the wives are taking steps into financial independence by investing in mutual funds or gold, once these activities, products, and the wealth starts getting discovered by the rest of the family, I have heard from women, anecdotally, not from 500,000 women, but that these get hijacked as well. So it brings me to think that who's educating the men, how to include the women in the financial journey, how to let them be, or to include them in a partnership together in the financial journey.
Very good question, Sayali. I thought that was a rhetorical question. I think men have to be allies, right? There is no other way, right? Unfortunately, I mean, some gender roles still exist. So we've actually seen many men join bases in order to get their sister on board or their spouse on board, right? Even with our cards, we see a lot of men applying on behalf of their family members, right? So I think it's a mindset, right? At the end of the day, like we also don't look at, and you said inclusive, right? I think it goes both ways. Right? It's not about alienating the men and saying, hey, we're building for women, like get out of our space, don't sign up on our product. But it's more of like getting men on board as allies, because whether we like it or not, they are an influence in our lives, right? In terms of how we make certain decisions. And so while women still, to your point, don't like that invasion of privacy for whatever it may be. And I think every woman has some secret stash somewhere for her security for that rainy day. I think moms will have an even larger, stash. But I think just in terms of the influence, it can come from different ways, and I think men need to be part of the conversation.
So as you're dealing with a lot of these women customers, do you see any difference from the women? All women are working, but the ones who are getting paid for it and the ones who are homemakers, do you see a difference in their access to these products like you're building?
Access is honestly not an issue. And in fact, what we are seeing is more oneness, right? Women don't behave like, their behavior is not necessarily primarily governed by whether they're a employed person, a business owner, or a homemaker. Because at the end of the day, all these women control cash. Whether it's something that their husband earns and gives it to them to manage the household, whether it's money that they themselves earn, or they make as, especially during COVID, a lot of women became home business owners, right? Freelancers. So it doesn't matter where the money is coming from. All the women manage money in their lives. And as Hena was saying, they are like They are squirrels. They've been trained to put something away for a rainy day. I think what all of us are trying to do is just get them to squirrel it away in better places, right? So I think that access is up to fintech to provide. So it's very amusing to me when I get, and I'm sure Hena deals with this a lot too. So, we know that the internet is 80% male. Take the name of any fintech startup. So I did Simple before this, right? Simple was 92% male. Jupiter
90%.
is, I think, 93 or 97% male. Zerodha is 96% male. Grow is 90, 91%. So during COVID, it briefly went down to 80% male, but now it's back up in terms of operating users. I don't hear any investors asking, so they are dominantly male, right, as a platform. But nobody blinks an eye that all of them taking different approaches are effectively going after the same demographic of the customer. But here we are trying to crack open the other half of the world with a focus on the other half, not even saying that, hey, we are not exclusive only to women. We are saying that, hey, we are women first. And 35% of our customers at Salt are men already. But yet, we keep getting asked this question, is this market large enough? Will they,
It
do
is
they
only
really
half the
control
world.
their money? Do they really want to? So it's very amusing to me when fintech has only cracked open a very small sliver of the total available market in itself, and most of it is men. Even if you consider their own counterparts, we have that many women to address, and not to mention all the other segments that are yet to be unlocked, right? So I think, and it requires multiple startups, just like male-oriented fintech has taken so many startups to crack open even whatever sliver they've cracked open until now. Same thing is required on the other side, right? So it's just a matter of taking a different wedge and cracking the business opportunities that are open out there. I think investors need to step up.
Yes.
And they need to sort of take this, maybe it's a contrarian view, maybe it is, call it whatever, right? Go unorthodox. But take these bets and then the results are here to show.
Yeah, I agree with everything Chaitra said. I think, Sayali, on your question about do we see a difference between employed women, formerly employed women, homemakers, the answer is no, right? I think inherently, I'll say this again, I think women want that independence and that control, regardless of marital status, regardless of income. I mean, lots of women have access to wealth and inheritance. A lot of inheritance laws are changing by progressive benches of judges, right, as we're seeing. So the answer is we haven't seen kind of a significant difference in terms of like, oh, I'm a homemaker, I care less about this, or, I don't care about my financial future versus someone who's going into work every day or whatever, right? So I think short answer to that is a no.
I mean, that's great to hear, but as my startup was also 90% plus men customers, the key issue that we faced was trying to bring women into credit products. I think the journey is starting for many women with savings products and then with credit. So how is that journey going to start them, whether it's on credit cards or personal loans or gold loans or so and so, right? Unlocking their assets to get them working capital to do something they want. So how is that journey going?
Yeah, I can take this first. I mean, we've been thinking about this for a really long time, and of course, our focus is urban India. I know a lot of these, a lot around credit has happened in the microfinance, micro savings sector, and great data to show that women make for more responsible, diligent, credible borrowers, right? So I think that's an awesome start. I think India as a country the culture is very savings driven, right? I think a lot is changing now as we speak. It is a credit starved nation. Majority of people are new to credit, so it's really nice to see everything that's happening, with bringing more, like using credit, like I always say, as an enabler, right, to drive up the economy. So I don't think women are different from that standpoint. Of course, majority of women are also new to credit, right? There has to be, different ways to target them, to serve their needs. But I think it all starts from from education, right? I was talking to someone who manages risk at a large BNPL player, and he said, I mean, probably with a large majority male user base, but he said one of the, the largest factors when it came to credit risk is people just not knowing that, let's say they have to pay their EMI by X date of the month, right? So I think just that educational layer, that informational layer is number one. We hear a lot about like, no, I don't want to get a credit card, it's going to make me overspend, right? I can't afford to have it, it's bad, you get hit with a lot of these fees and charges and there's no transparency and things like that. So I think, but what we've seen is once that education is done, then it's almost like, okay, this sounds like something I should get on board with, right? I should start building my credit score when I'm young, right? I may not need a massive, whatever, personal loan, or even if you're looking at secured products, home, car loans now, but I want to get into the system so that it becomes easy for me later on in my life, right? So these are some of the things we've seen. In fact, with our card, it's actually a prepaid card, so you have to load and spend. We did have ambitions of adding a credit layer to it, but over a third of our active users are asking for personal loans. They want to make high ticket purchases, so they need that liquidity. And so we're trying to figure out with the right partners, of course, how we can target this market and not just look at women as another, credit stuffed segment to serve, but as a market in and of itself, right? The hypothesis is that, like I said, women do make for better risk profiles when it comes to borrowing. Women, we can offer maybe better rates and terms, right? Look at more flexible repayment schedules, right? The experience is broken right from access to approval and even through, and I was telling you before this, Sayali, we have our share of like collection and repayment horror stories. There's and mostly affecting women. There's so much we can do throughout the experience to just make it a more, for the lack of a better word, a friendlier experience that people don't tend to fear, which they generally do when you say loans or credit or debt, right? So these are some of our early insights. Chaitra, if you have anything to add.
I think on credits, Hena is the best one to talk about. But what I'll add, which I have observed very simply, is that irrespective of, so women can be categorized not in the traditional demographic buckets, like as either income segments or age segments or profession segments, but in terms of behavioral buckets, right? So in behavioral buckets, what we are seeing is whether that lady is earning 20,000 rupees or is an HNI, the behaviors exhibited and the progression as a customer is very similar, just a different ticket sizes, slightly different nature of the product as they go along. The second thing that we have observed is the path to getting a woman from zero to first trial takes longer than it does men. It takes 3x longer, but once they, so it's I call it like B2B sales cycle versus a B2C sales cycle. Mm-hmm. But the reason it's completely worth it is two. One is once they have that first trial, once they taste the salt, as we call it in our organization, they move very rapidly at 10x the speed in terms of wanting more, right? Their appetite is like, okay, now I've tasted blood, give me more. And then they start thinking, what else do I need? Is it a credit card? So that was one of the reasons that Salt had to build multiple products for launch, was because if we went gold only, we would not be able to capture this customer. If we went mutual fund only, we wouldn't be able to capture this customer. And same thing as budgeting and psychometric, right? We kind of started with all of those before we launched, was mainly because of this reason. And the third, the other thing that we are seeing is they start off, somebody who has a 50,000 investable surplus in a month starts off her first transaction in a mutual fund at 1,000 rupees in the first month. In the second month, she does 5,000. Once she trusts the platform, she'll open it up in the third month to 50,000. Now, HNI clients, we see this start from 5 lakhs, go to 5 crore, literally in the span of 6 to 8 weeks. Mm-hmm. So that behavioral, that journey is what we are seeing, and which is brilliant for us because we thought we will introduce PMS as a product much later down the line. And we had to accelerate the introduction of PMS, and now we are making money on wealth very much sooner than we expected because mutual funds may we sell direct and as a brokerage you don't make money there. But PMS, we're starting to make revenues because our HNI clients' appetite once whetted, they want to give you their entire portfolio.
Very cool. Maybe then the way to bring them into credit is loan against shares versus trying to underwrite their income, which is what I saw, if I may add from my experience. What I saw was that while we wanted homemakers to bring their assets to use into working capital by giving credit, what we found is that it's very hard to underwrite in partnership with existing institutions, which are very income-based underwriting for homemakers. So you could give them a gold-backed loan, but beyond that, it's very hard because it's hard to ascertain that woman's income. So then the idea is that can we take from savings, then loan against shares model, then the gold and the home ownership if that comes especially from inheritance. So these are some paths that I think remain to be explored to be able to underwrite homemakers.
We should partner.
But I think the promise for me is the overcoming of bias when it comes to underwriting using digital platforms versus current physical institutions. I think my personal experience there itself is that, so I was building a loans product for the mass market where we did middle class people, personal loans for middle class people, but I wanted to understand the biases myself. So I actually dressed up like this in a Western outfit, went to a bank, and both like PSU bank, private bank, and I experienced very good customer service. They're like, ma'am, aapko kya chahiye? Come here, we'll give you a card, we'll give you this, we'll give that. But then another day I went in a salwar suit and Mangal Sutra and Bindi, and they're like not willing to give me any light of day. Even though I went armed with my salary certificate, which was decent enough despite being a startup. They were like really not interested. I did that similarly with my cooking lady, and we took her, and she earns a lakh rupees. She runs a catering business. She runs 1 lakh a month. No dice, right? She can't talk in English or even proper Hindi, and no dice, whether PSU or HDFC or anyone in between. And that to me is something a digital platform can overcome. We are not underwriting based on bindi or jacket. We are trying to underwrite based on the financial behavior, behavioral insights. And I'm hoping that will take us much further. Sorry to add the personal story, but I think that's what I think we are here to do. I think we need to be able to underwrite women differently, think of their assets differently, and also think of household income as a way to underwrite.
Yeah, absolutely. I think I had a similar experience when I got into business school and I was looking at some education loans. Question was, आपके पापा के पास घर है क्या? Like, that was and I was like, it was very jarring for me to hear something like that over a phone call. But I think those biases exist everywhere. I mentioned a horror story around repayments. This happened to my co-founder, Deepika. This is a large private bank in the country. She has a great credit score. She's never missed a payment on her credit card. I think her bill was due like 7 days later, and her husband gets a call from the bank saying, "Aapke wife ka bill kab bharoge," or something, right? And it was very shocking for her because he was nowhere on the account, right? Not a nominee, not a joint, not even on her savings account, whatever, right? But they somehow found out, she's married, who's the husband, contact number of his, and so I think those experiences exist. And it happens more so for women. From then on, we even, and women, I mean, they get harassed, right? Your in-laws get called, your neighbors get called, just very unnecessarily. And so I think there's a lot of work we can do, and it's all systemic. There's no rule around this, right? The regulator is not saying, look at gender and then manage risk accordingly as well. So I think lots to be done, like I was saying, throughout the experience in terms of really understanding these nuances and building something where it's women first. And I think digital platforms will help us do it better. But even with that, there's some work to do, and that's why we wake up every day and do what we're doing.
We need newer scorecards, right? And we
Yes.
need newer factors into these scorecards. And I'll just tell you a very small story that was influenced how, when I was starting Simple, how I started thinking about underwriting or risk assessment of a customer. I was in the US at that time, and one of my friends, a PhD from MIT, was at Intuit as a fellow. And he was doing some research into, because Intuit had QuickBooks, right? They had global accounting data from various businesses. And they were trying to figure out how can we underwrite small enterprises in a more efficient way so that we give them better access to capital. The only correlation they found between good credit behavior and the data that they pulled out from QuickBooks was something that back in the day was an indication of sensibility of a person, not necessarily business health. Any guesses?
Shouldn't take a guess.
Whether the business owner used a MacBook or not. That was the only strong correlation that they found, right? So I think, and then there was, that goes on to show that back in the day, today everybody owns a Mac, so you do the same thing. I don't think those results can be relied upon. And that also tells you the evolving nature of
But what are the
these.
proxies? We need to find those behavioral
You need to find those
proxies.
proxies. Not every proxy is going to be relevant throughout, so you continuously need to take that.
I mean, the proxy itself of women being better borrowers is many times in many lending cohorts not true, because the husband is a defaulter and then he applies in the name of the women. So when you cut the data later to see if women behave better than women, you see the other way around. And you're like, what
Exactly.
happened here?
Yeah.
It's actually fraudulent in most ways, because the women had no idea. If you call her, she's like, what loan? I have no idea, right? So proxies work both ways. Many lending models that exist today have women applicant as a red flag. And then the applicant has to then overcome that red flag with, data that redeems herself to be a good credit person. So.
Yeah, no, we hear that as well. And again, someone I know, a senior leader, a woman leader in Fintech, said she applied for a home loan with her husband. And I don't know, got declined or got some ridiculous rate, and was, and her credit score was impeccable and all of that. And then as soon as she removed her husband from that application, she got, so it's, yeah, so I think then she dived in, and then she realized that when, because people assume that when a woman, I guess, is the beneficiary of the loan, it's usually a man applying in the name of his wife or something, which again is part of the bias. Although with digital platforms as well, and we've been doing our share of just understanding, some of these, how rates are determined on some of these, new age loan platforms. And again, I don't know if this is, it was actually built this way or how risk is factored into some of these algos, but we actually saw some platforms showing interest rates of like 4 to 5 percentage points higher for women than men on some of these apps as well, right? I'd love to do a deep dive and understand what model is being trained.
The fraud signals.
For signals, right? Is gender part of it? I hope not. But no, these things do exist. I think we do have work to do, like I say, to even challenge some of that. But like I was saying, I think just education, awareness. But Sayali, question for you, did you all experiment with a lot of this alternative data points, right? Like we're looking at things like utility bill payments or tenure of like your postpaid, mobile number, right? Things that, because this topic of like credit for homemakers and Chaitra, to your point, right? Just a different scoring system other than like, oh, you have an income and you have some 1 or 2 credit cards or whatever.
Yeah, so thanks for that. We did experiment based on non-income models, because if it's a salary and especially a steady salary, it's easier to underwrite with that, and if there is a credit score, combining that knowledge. But what we did is that in the 3 C's of underwriting, right, like character, and then capacity and collectability, if we found good character based on whatever data we found on any our app, our interactions, or sometimes we ask for incomes, even if it's variable. If you're doing anything, it's okay. variable is okay, non-formal sector is okay, but you see and you hold a certain balance in your account, then that shows capacity. While it's not a clear salary-based model, it still showed that if you have an average bank balance that you maintain over months and it meets at least a level of the EMI that we want, then we are willing to take that risk. The other use case driven underwriting also helped. Like if it's a mom trying to get an education product for the child, then the use case itself is a redeeming factor. And if we're paying the education provider directly instead of cash into her account, then the use case is actually locked. And that is a redeeming factor. So that is something we could use. And having utility bill, postpaid telephone bill, all of these are also redeeming factors that can be used to ensure collectability, that she does live here for a certain period of time and she can be found to collect the money if she defaults. So a bunch of these factors we did experiment with, and they proved to be quite useful to bring more women into the fold. Some of those conversations at that time were also credit card driven, which we didn't have as a product, but I hope to see a lot more, like a sugar product, for example. Women are like, I'm managing the month expenses. I want a little something for myself at the end of it. But the credit card features are usually not designed for that. So I think some of these products is what people wanted to see.
Yeah. Yeah, I think, I mean, women control 80 to 85% of consumer purchase decisions, but I don't know, 85, 90% of borrowers in the country are men, right? So there's just this inherent dissonance there that we need to solve for.
I think we are running out of time and people are ready to eat lunch. So any final comments from both of you?
Any questions we can answer?
Any questions?
Hi, can you hear me? Hi. I found one point that you mentioned about the MacBook data point from your Intuit friend. So that implied that the users of MacBook were the better borrowers as compared to non-MacBook borrowers?
Sorry, I can't hear you clearly.
Were the MacBook users the better credit performers than the non-MacBook
Yes,
users?
yes, that was the only correlation they found between good credit behavior. And this was at a time when MacBook owners exhibited a certain sensibility. So Windows was the dominant platform, but QuickBooks MacBook was the version that
Or a certain
showed
affluence. They just
Yeah, I think that would be the
sensibility.
proxy, right?
No, because there were other data, right? Like they looked at the balance sheet data, they looked at the.
okay.
Because QuickBooks is an accounting software, it's like the tally. So it collected all the data with respect to the affluence of the person or the affluence of the business, the profit margin, et cetera, et cetera. In all of those data points, it was not the affluence that stood out, but just this one sensibility across different levels of various other parameters.
It's an interesting data point, so I thought I'll just clarify it.
Yes, yes. You should look up. So during that same time, in the early 2010s, there was a collaboration between MIT and Harvard. I forget the name of I'll try and Google it up. But there were two people, one from MIT and one from Harvard, who collaborated and created a 45-minute psychometric evaluation test. And they administered it to small business owners in Africa. And in fact, I think either Tala or there are basically Tala built on it, right? They would make entrepreneurs take this 45-minute test on the basis of that result, which was a psychometric test. It was not only related to numbers. And they would administer loans, and they had excellent or very low default rates.
All right, thank you.
We had another question here.
Hi, thank you so much. And I've been listening with rapt attention, and this has been a really enlightening conversation. I think a more recent version of the MacBook story is that people found that those employees who had bothered to change their browser from Internet Explorer to either Chrome or Firefox ended up becoming better employees. So these things are all over the place. I'm a founder in the consumer fintech and financial advisory space. Um, about 82% of our users are men, and I didn't know that I could feel good about that number until now. But the challenge is that men are 80% of the internet, right? And when we spend a marketing budget of performance marketing channels, they meet that bid by serving it to more men, right? So is there something novel that you've learned, and I think you alluded to this earlier, about there being maybe a higher CAC but a longer CLTV, and something different about having a woman as a customer?
It's a longer gestation period, but the CAC is very low. So we've managed to, our cost of acquiring a sign up and an onboarding on our platform is less than $1. In fact, my most recent CAC is 40 rupees. 42 to be very precise, right? And this is largely on Instagram and Facebook because we have barely just started opening up Google now. So I expect it to get even better. It's just a function of honestly, so I joke about this that, if Salt fails in its current avatar, we'll pivot and become an advertising and marketing agency that knows how to sell to women because we've created this internal 3-person ad agency almost, which has mastered the art of figuring out how to acquire this customer, where to go, what kind of ads to show, what kind of things to say on that. And I think that's why I'm saying that there are so many people out there waiting to be acquired. It's just you need to communicate with them in a different way. And I had seen this, I know we have like 3 minutes left, so I'll just share one thing with you, which was my experience. The way I landed up on this path, right, of creating Salt was I was designing an offline product for Simple when in 2019 May. And that was the first time I was physically interacting with customers in a store. So I would go to the supermarket, pretend to be an intern, and say, hey, would you like to sign up for this Khata product? It works exactly like your Khata, blah, blah, blah. Out of all the men that I would make this pitch to, and this was true for my interns as well, the real interns, men were very binary. They were quick to either say, yes, sign me up, come follow me, do my KYC, I'm on board. Or they would say, no. And the most common reason given was, मेरे पापा ने कहा है बेटा जिंदगी में credit कभी मत लेना. No matter how many times I would tell them that this is khata, it's not a credit, it's convenience, they would be unwilling to change their mind. So very binary. Women, on the other hand, almost 10 out of 10 would say, very cool, interesting, okay, let me come back. Most common reason given was, let me talk to my husband. And obviously the feminist in me was like, shuru mein very, very outraged. And I was like, how can this be? Like, to sign up for this, why do you need the husband's permission? I think that's where traditional financial services end up stopping. They don't dig one step beyond that, right? They accept the lady's word and they say, oh, she's not empowered enough to take this decision. But because I was outraged, I invited myself over to their homes for chai, used the advantage that I had, which was my gender, and they felt safe inviting me over. I went and spoke to so many of them, and I realized feminism was just not a threat. It was just their way of buying more time. And there was this one site out of 10 sites where we did our pilot, where 1 month after we launched, so we used to put our interns there for 2 weeks, sign up 25% of the catchment in that store and leave. And then it would get into steady state. This one place where we left after a month, so it was during Dasara we did this. After Diwali, suddenly disproportionate number of people started signing up of their own volition. And majority of them were women. And we were really flummoxed, like, what is happening here? Then when we double-clicked and went back, we realized that the interns, because it was Dasara, had done what in marketing parlance would be called a branding activity. They had put up a stall, they ran some games, they got the brand awareness created. And that, in the month that followed, that awareness led to conversations around the brand, led to familiarity, which is what we call as social proof, and then value discovery. The moment the value discovery happened, they didn't need somebody to come and tell them sign up or no, they signed up on their own. So in other words, women don't like being sold to, they're buyers. So you see, where do you see this approach being applied by companies and applied very successfully in D2C brands? So they know how to sell to women because it's only done in products that are like beauty products or fashion, etc. Our entire thesis, and I'm pretty certain it will apply to Basis or anybody who's selling to women, take the D2C brand approach as a financial services company, just apply it and see it. If you don't get the best results and start converting women, then we'll change our name from Salt to something else, let's say. So that is how powerful this is. It's just a different approach towards selling to the same consumer.
Thank you so much, Hena and Chaitra, for an amazing discussion. Thank you all for staying. And with that, I think I'll end the panel here.
Thank you.